guess the point I'm getting to in my own mind.
Sorry, guys.
Sing us a song.
Kill that.
Getting to in my own mind is that if 1 million cubes and these other interventions meet the requirement for environmental flows, if you like, then later on I've got to think to myself, well, what actually is the point of another 4 million a year? Well, that's for another day.
Okay.
You don't have to answer that.
Okay, that's fine.
Okay, further questions? Councillor Graham.
I have a few minor questions. Just the first one, I'm not sure who wants to answer this one, but other preconditions. I thought we had 4 conditions precedent. Didn't realise we had, that's the heading.
Which point are you on?
Right at the heading, the first, page 7.
It's things like, I've got a copy of the resolution.
Oh, have you?
Got a copy of the resolution here, and it's things like, because I also had the same question in my mind when I read that, it's things like a certificate issued by HBRC's legal advisors saying X, Y, and Z. It's, you know, there were the key things are the conditions precedent, but the way that the resolution was worded, it had other things, including council getting its own legal advice on the RWSS documents and all related legal matters, etc. So there's a bit of a tick list there of things which we need to make sure that we've done.
So due diligence type conditions.
Yes.
Okay,
Yes.
I just wanted clarification on that. I'm interested.
I'm sorry, would you mind if I just asked a follow-up to that?
While we're on it, yeah, sure. Supplementary.
A supplementary
A follow-up,
to your
as
first
long as I
question?
can carry on my,
So one of those other matters would be, I think you just mentioned this certificate. I'm reading from the minutes of our previous meeting. In relation to blah, blah, blah resolution, a certificate will be provided by the HBRC legal advisors summarizing the terms of all executed water user agreements, identifying the water user parties who executed the agreements, and explaining the enforceability or otherwise of the agreements. That certificate might be expected when? And is that one of the things you're referring to as another condition?
Yes, and we would come to you with all of the CPs, you know, our confirmation that the CPs have been met and an explanation and demonstration of that, and we would include at that time certificates of that sort. The way that we will need to get, that we will satisfy that condition, which is not a condition precedent, but condition, but also satisfy the privacy aspects, is to provide a confidential copy of the water party users to the councillors, but for that not to be in the public domain, but to provide a certificate that describes. So, yeah.
Yeah, Councillor Graham. Thank you.
I'm also interested in the local capital raise to take out CIL as part of their equity. I note that that's going to be after we've achieved the final financial close. But I was wondering whether you've done any work on that, and how successful you think that might be. So just an anecdotal view, really. It may be an anecdotal view, but especially related to the iwi.
I'll probably best to answer that.
You can do the iwi, but yeah.
The so you've got a broad question, a slightly narrow on Rex, and I'll start on your broad if you don't mind. So how successful do we think the overall capital raise will be? I'll try and answer this really quite fully. So to give you the commercial parameters of that, in a very sort of headlining level, the commercial parameters of that instrument, it's essentially it's for the first, through the uptake curve, it's a coupon based instrument, so it has a fixed paid cash flow, basically of 5%, or yield based instrument, so it's coupon, and then it converts at an uptake threshold, either 15 years or when the various parties have reached a particular point in the uptake curve, it converts to ordinary equity, just like HBRC, just like everybody's equity, right? The fixed paid piece it was designed in the first instance to enable, if they were an irrigator or a farmer, to actually borrow against that yield. So that opened out a wider pool of ability to finance it. That was the logic of it. This is going back 2 or 3, 4 years actually. There's a if you were sort of doing a market survey in particularly the irrigator group, you'll get a range of opinions as to whether somebody will want to sit there and simply say we're going to optimise our on-farm performance and drive our financial returns that way, and we're not interested in the investment. Whereas you get others who will absolutely say it's fundamental to our position that we have to invest because we want to hedge our water price. So you get a full range of extremes. But in terms of the market soundings we've done, we expect that capital trust to be fully taken up, and we expect there'll be more demand than that. Now, iwi, what I can say in broad terms is that it's always been a principle of the scheme that if we could create a space for iwi investment in the scheme, then we'd look to do it. And it's fair to say that there's a conversation involving ourselves and the institutional investor and Crown with exactly that particular proposition in mind. It's a potential, it's effectively underwriting a potential option for iwi through the Crown instrument, and that conversation is alive, and that's a conversation that's progressing. So the final point I'd make, going back to the instrument itself, is that it's perpetual. So it's a tranche of equity, goes from coupon to ordinary equity, and it's always been intended to survive the 70-year transition. Okay.
Can I follow that? I'm sorry, you probably got more, but just I'm interested in that. So you're talking, when you say a conversation with iwi, you're talking principally about treaty redress? First
no,
question.
We're not talking about treaty redress
Okay.
per se. What we are talking about is and it's really their call, but we're saying, okay, we think that we think it's a if you go back to the principles of how we're trying to set up the entire capital structure, it's always been a case of we always knew we needed a certain amount of institutional equity to get it there because of the scale and the demand risk issue. So that's where the institutional piece fits. But we always had a philosophical position that local investment per se is an important part of the capital structure, and so we've always retained, it's fair to say, now right through the entire process, the view that we'll look to carve that out and create it. And so now that it's getting to the pointy end of the whole deal, the consortium, effectively, the consortium including Crown Irrigation, ourselves and the institutional, are saying, well, let's make the space, let's at least enable a space for iwi investment in this deal in a way that creates a tranche for them, but it's underwritten, so it's not obligatory, it's underwritten.
So just that clears that up. So considering it's not necessarily treaty redress,
Yeah.
is there room for other settled groups
Yes.
in Hawke's Bay? Yeah. Okay.
Yes. Yep.
Thank you.
Yeah, no, I understand that's a capital investment that they may or may not make in terms of iwi, and it could come from anywhere. Could come from Waikato, Wairoa, could come from Wairoa. So I get that. Point 78, the call option that the investor has to, which enables them to invest, to buy 20% of our capital, and we, Andy talked about that some time ago. I'm just interested, is that at an entry valuation, or is that at a valuation, subsequent valuation?
The price that they will exercise it at will be agreed before we finalise the financing documents.
So it might be entry somewhere in between.
Yeah, I
a
mean,
negotiated price.
That's correct.
Yeah, okay, get that.
Yep.
Councillor Belford.
Just on that one, so that is an unfinished piece of business, negotiating with that.
That's correct, and obviously it's, whether it's a positive or a negative change will depend entirely on where that price is negotiated to be, and for us to agree to it, it needs to be pretty much in the neutral territory.
So we'd expect that you would have that completed by the time you were coming with all the conditions, to meet the condition precedent of having an institutional investor.
You will? Okay.
This would be part of the deal that would have to be concluded, right?
Certainly for the directors to be recommending it, we would need to have the confidence that that was there, or that we had an ability to terminate. So for us to come to you and say that we're ready to go, we would need to have that ticked off.
So, without sort of getting into the absolute specifics, we've got a, from the institutional, they've arrived at a number. From our end, we've arrived at a number, and we're half a % difference between the two numbers. So it sort of tells you that fundamentally there's not a catastrophic gap in our expectations, if I can put it that way. So
But a bit of arm wrestling still to do.
it's just one little bit on the deal, really. in the end.
So-
Can I follow up?
Good.
So are we
Councillor Ward.
talking 20% of our shareholding, or are we talking 20% of the shareholding? So if it's 20% of ours, it's actually 10%.
And it's
Yeah, that's
up to
right.
up to
You're right.
20%.
Does that have
Yeah.
an impact on the right to appoint directors? Does it
No.
change the dynamics of the company?
No, not, oh, well, actually, that's a fair question, Dale. I don't think so, from what I'm seeing, no.
Councillor Belford.
So those kinds of details, including, there's a reference here to SIL providing its money at so-called concessional interest rates. We have bank lending at some rate, and so forth. We have this particular deal. Those kinds of financial details, do you anticipate those being public at some point? I mean, on the one hand, I can imagine you have a lot of concern about what you see as spurious, back-of-the-envelope financial calculations as to what this all means and what it's worth and so forth. But you're inviting that basically by the lack of detail that is provided, and presumably because you think this is commercially sensitive or whatever, but we're well
Certainly
beyond
most-
that point, aren't we? And so at what point do the actual, there's a reference back here to our rate of return being provided in a subsequent document, so forth. So when and to what extent are the actual important bits of financial data to be released regarding this?
Certainly our rate of return will be in the final pack of information which is available and publicly
Yeah,
available.
correct.
There will be terms, and I've seen numerous public procurements where the documents are public, but certain key pieces of information are redacted, and often that will be an interest rate or a specific provision, but the majority of the document is
Yeah.
publicly available. So I can't guarantee to you that every aspect will be in the public domain.
No, I look, the underlying point here is that we're just one party that these parties do a deal with. And taking Crown Irrigation's position, they have other deals to do, and they're negotiating one right at the moment. The terms in that particular deal will not be the same terms as they entered into with us, and they do not want to compromise their commercial negotiation with that party by having our terms in the public domain. I mean, that's just 101.
But the terms have to fit within the government
Yeah, they do.
mandate, and so
Absolutely.
that gives the comfort, I think,
Yep.
for the public that we are within those bounds.
So you're therefore content to have continuing public criticism or analyses that'll say, oh, we must be borrowing SIL money at 6%, just to pull a number out of the air, or 12%, or whatever it might be, and bear the criticism for that. And I, as a counselor, can't rebut on our behalf. No, don't get your, knickers in the knot here. It's not 12%.
No.
It's, we're really hamstrung in our ability to make the case for.
Content? No, I'm not content, but I think I am realistic. And as Andrew said, we are one investor, and once it goes into the RWLP, all of those investors have to be comfortable with the overall investment and the terms and the returns, it is the commercial reality.
Yeah, if I may.
Could I ask a supplementary to that?
Okay,
Sure.
supplementary, sure.
Is it not the details of the various interest rates you're getting from various parties, but are we getting our rate of return? Is that not the question we should be asking? Is that not what the public should know?
Well, certainly that is publicly available information, and that will be answered in the public domain. And, you know, and also we're constrained by our SOI, so.
Thank you, Councillor Belford.
Yes, in item 70-6, there's a discussion of the investor fee and the rejiggering that has occurred around the investor fee, but it would appear there still is one at whatever level, and that is something that would, I take it, have to be paid regardless of what the financial returns are turning out to be. So is that a?
No, the all the investor fee is you're taking is a way of ordering cash flows. So it doesn't. I mean, if there's not sufficient cash in the system, then the so-called investor fee, it sits behind in the cash flow hierarchy. It sits behind debt, sits behind subordinated debt, and it sits behind it sits pari passu with well, actually in actual fact all it does is it sits in front of HBRC's cash flows. Right?
Okay, so there's not an obligation to pay it if the.
No, at some point in time when there's sufficient cash in the system, it will be paid, and so it does accrue. But the fundamental point,
right.
yeah, but the fundamental point is if there's not sufficient cash in the system, it's sitting in a hierarchy. It's a way of ordering the cash flows. That's the intention of that instrument.
Okay.
And the fundamental point is, though, but I want to complete this, is that as investors, we all look at the upside, downside cases, the uptake curves, et cetera, and make an informed decision, as will be presented to you by the HBRC directors in the case of HBRC, as to what are the forecasts in a very slow uptake curve, so, for example, in a negative case. Everybody does that. So that's the way there's a bound in this deal, and investors make informed decisions based on risk. But that's what that so-called investor fee does.
So just a supplementary to that. So we haven't yet been advised what the fee is, and therefore we don't understand what the implications are for the cash waterfall, or whatever you call it. Will we be informed about that as part of the briefing we get on the 29th?
You'll be informed. Oh, look, I don't want to cut across you, Danelle, but Deloitte's will give. I would imagine that Deloitte's are going to give you a perspective on the upside, downside cases, et cetera, and say what that means for the cash flows. Yep.
So just two more questions, if I may. On point 82 is a discussion of the design and construction contract and final capital cost to be reported in a subsequent HBRC paper. So we've always understood the sort of the more variable aspect of this cost is the distribution system.
Correct.
And now, as pointed out in a later point here, we've added this zone N. When we're told that the contract, that we're insulated from any cost overrun aspect of this, does that apply now to all aspects of design and construction, or just the dam itself? So what risk is there, are we bearing, if any, in the costing of the distribution aspects of this?
So the construction contract has, I'll use these words, separable portions. So there's a separable portion around the dam. There's a separable portion in the primary distribution network, that's the canal and big pipes. And there's a separate proportion that's sort of sitting there for maybe a future time, which was the hydro. But it's parked in the final separable portion is the basic principle of in the fixed time, fixed price contract, the constructor builds a proportion of the secondary network, but leaves a proportion there for future uptake, right? But the capital is raised, all of the capital raised to complete the entire build, including that bit that's held aside. That's that piece of the separable portion. Now, the degree to which there's two broad trends. One is that when we looked at this and say we went back to October, November, December, we had a separable portion size, volume of capital, which is about 10% of roughly 10% of the total capex, construction capex, in that separable portion. On the basis of our network design, that separable portion is going to reduce, in my view. In other words, we're going to build more of the secondary network right away, and leave a lesser amount that's sitting in that piece. That's the trend. I have to, the board has to see it. I have to see it. The investors have to see it. But we're literally in the final negotiation around all of that stuff as I speak here, because I've got a team in Auckland doing it. What's the risk of I mean, it's a separable portion that was costed on what we call a materials base, time and materials basis. So it wasn't absolutely fixed. So then, what's the absolute risk to the investors that blows out? Well, the real point is that the way you manage that risk is you make a discrete, and the RWLP will make this decision. It'll look at a particular customer that might be way on the periphery, wants some water, but in a purely economic sense, for the scheme with its constraints, is not optimal to supply. What will happen in that circumstance is a pretty straightforward process. That customer will either pay the full connection fee, the additional pipe to get there, or they won't. And if they won't be supplied. So it's an easily straightforward management proposition as to whether you supply or not. Our expectation, and this is not unrealistic, our expectation is that for future, to the extent that we need new customers over and above those customers we have today, and it's not a lot, then they'll be infill customers. So in other words, they'll already be sitting in the areas that we're servicing.
And so I think you said that when we were presented the 196 or so, that all of those folks, we are guaranteeing delivery to.
Yep.
Okay. Just one more question?
You didn't, sorry, Councillor Barker, you weren't a supplementary to that? No, okay, yeah, sure.
On point 85 is talking about Zone N, and the last sentence of that item says, water user contracts in this zone are underwritten by confidential commercial contracts with non-related parties. What does that mean?
Simply means precisely that. As you're aware, we need to get, well, the scheme, not we, it won't be HBRC. The scheme, when it's up and running, will seek to consent that zone, and there are broadly three consents. There's a off-take consent, so water runs through, comes off the dam, runs down, across the head race, gets dropped in the Tookie and is uplifted, dropped back in a distribution network, run quite likely subject to consents into Lake Hautuma, through Lake Hautuma down the Mangarata stream, and then distribute off that stream. So there's a take and use consent process that'll have to be gone through, and there's a production land use consent process that'll have to be gone through, all of which those rules are set through Plan Chain 6, so that consenting process is underwritten.
So,
Non-related party.
Well,
are you distributing through Lake Hautuma, regardless of whether there's additional environmental flows?
No, not necessarily, Alan. there's the option to bypass Lake Hautuma and simply distribute into the Mangatarata stream, or there's the option to move water through Lake Hautuma. Those options will be worked through those options are costed and designed, but they'll be subject to a consent process, so we just haven't, the scheme itself will deal with that post-financial close. But the point is that there's a real benefit there's a benefit to the scheme in terms of having a larger command area, but equally there's a benefit to the environment in two directions. One is clearly there's an ability to move a column of water through, in principle, through that wetland, which will improve its water quality and its environmental characteristics over and above what could be achieved anyway if you don't do it. The same thing applies absolutely for any of those of you who've been down through the Papanui stream. Anybody around this council table been down there at all? Right. Well, the Papanui stream, so the Mangatarata stream, if you're looking at what we call MCI scores, those macroinvertebrate scores, the Mangatarata stream is probably the most degraded stream in the entire catchment. So it's the same principle. It's basically the same principle, is that moving water through that stream at a decent flow rate will materially improve that stream. Now, that's where you get frankly, that's where you get a classic case where the irrigation scheme's got and the environment in terms of stream health have got a common interest, really. So all of that's pretty sensible. The third point I really would make around that zone is it spreads the whole nutrient load further than is the case currently. So there's less intensity in localised places. The nutrient load spread further, and so therefore there's less risk.
Spread or diluted?
Well,
Diluted.
how do you see it?